Hey, what's up, guys? It's Jonathan here. So, throughout 2020, there's been a pretty aggressive increase in gas prices, most initially fueled by the Russian Ukraine war that started in March, and it was exacerbated by inflation and the overall demand for travel. But over the past couple of weeks, we started to see a divergence between oil prices and oil company stock prices. So, let's talk about it. Right now, the USO, which is United States Oil, it's the ETF that tracks oil prices, is currently down 15% from mid July. Whereas at the same time, oil stocks themselves are up 32% in the same time frame, which is really weird. You would think that, okay, if oil prices are coming down, oil stocks would come down as well. Now, there's a multitude of different reasons why the market believes that this is happening. One of those reasons is that people just believe that the market just may need time to adjust to the lower oil prices. In my opinion, I think this is a pretty weak argument because generally speaking, the stock market is always looking forward, usually anywhere from about 3 to 6 months ahead of time. So I'm not really too sure if I buy that one. But another reason that we have too is that in the past, more specifically in the mid 2010s, back when oil prices did spike and then crash immediately, oil companies did get caught, you could say, with their pants down, being over leveraged during that time. So they were borrowing money to increase production because prices were so high. But obviously, when oil prices crashed, they kind of got the poop end of the stick. Right now, a lot of these oil companies are really focusing on paying off their debt that they struggled with during COVID and also given money back to shareholders in terms of dividends. And I believe even there's even some companies are even going as far as buying back their own stock. And because of this, these are creating very strong balance sheets for these companies, which shareholders, obviously shareholders during a time of a recessionary and possibly recessionary time frame, they really want to see they really like to see strong balance sheets. So it's another plus for their stock, and probably some of the reason why we have seen their stock perform so well recently. Another reason why we're starting to see such strength in oil's company stocks is because prices are starting to hit a point where the future pricing is actually higher than the current spot pricing. So this allows oil companies to lock in higher prices for future production, whether whether we go through the recession that a lot of economists believe that we will go through in 2023 or not. Right now, the oil companies can lock in those prices. So that's given another bullish reason for investors to pile into these companies. And then something I should mention, I don't really think this is that big of a factor, but but recently, especially with what we've seen come out of China with the zero COVID policy, that is putting a lot of selling pressure on oil prices, but not necessarily oil stock prices, because a lot of the oil companies don't are usually are not only multinational, but they do very little business in China anyways. They're not going to get affected by oil demand in China, but oil prices will because China is a big user of oil throughout the world. So this is a little bit more of like a long-term catalyst in my opinion, but it is something that I think I should mention because I'm pretty sure I'll hear about it in the comment section. What are my thoughts about oil? I don't think oil prices are sustainable at these levels. I still think that there is some room for oil prices to soften, especially if we do end up going through a recession, as many people predict that we will. I think that oil demand will definitely I think travel demand will slow down, and travel demand will slow down oil demand as well. And I think it'll cause a lot of Americans to really reconsider what they're spending their money on. So I think that will be a demand destruction kind of event. But I think that the big catalyst that we have to really watch out for is the end of the Russia Ukraine war. Not until we see the ending of that conflict, we really won't see a massive downfall in oil prices. And I think we will still see a lot of the volatility that we have seen ever since that war started. That's my opinion when it comes to oil prices. Now, when it comes to oil companies like oil stocks like Chevron, Exxon, blah, 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 this one's a little bit more tricky because on one hand you can't say, oh well, those companies are richly valued because of the price of oil and they've been making hand over fist money because oil is so high. But the problem you have to consider is that a lot of these companies as well also invest in renewable energies as well. So they invest in charging stations, natural gas refueling stations, and stuff like that. So it's kind of hard to say, oh yeah, they're not going to do well in the long term. And to some degree, I kind of agree with that. I think that there are better players for alternative energies than some of these oil companies, but that's more of a long term perspective. In the short term, so anywhere from now to like maybe 2 to 3 years out, I think oil companies can still do well, especially given the fact that they are able to lock in such high future pricing right now. It's one of those things where I think oil companies will suffer at some point, but I don't think I would personally go out and short oil or start buying puts on oil because it's I feel like it's going to take so long for that to play out, that um, destruction of the valuation of oil companies. So when you short or you buy puts on a certain security, what ends up happening is that usually you have to pay some kind of premium for doing so. So when it comes to shorting a stock, you usually have to pay some kind of interest because you are technically borrowing that stock from someone. And when you buy puts, you have to pay for um, data decay that's happening with those puts. So, and then when it comes to selling calls, in my opinion, that doesn't really make sense unless if you're already bullish on the position overall. So, because of that, I really wouldn't short oil. But I don't think that their dominance is going to continue much longer. So, thank you guys so much for watching, and I'll see you in the next video. Peace.